For those who don't know, my name is KG. I'm the founder of Cosign Magazine. Cosign's a media company built at the intersection of culture and entrepreneurship. This is really important for us, so I'm glad you guys are coming today. One more session left. Make a round of applause for yourself as well. One more session left. So today we're going to be going over building your business power team. I'm going to bring up the panelists, and then I'm going to ask you guys a question before we get started. So if I could have our three amazing panelists come join me at the front, we'll do short intros and get y'all kicked off today. To my right, we have Deshauna McKinney. She's Assistant Vice President at Frost Bank. Give it a round of applause for her real quick. I love you guys. Up next, we have Eileen Pesanta. She's the CEO of Next Gen Tax and Financial Services. And last but not least, we have Soluto Uba, who's an attorney and founder of Uba Law Group. Give love for him as well. So I'm going to be completely transparent. The idea from this conversation, this panel, came from actually Mr. Uba. We did an interview at the last Relationships with Money series. It was more for our podcast. And he went over like the importance of building a power team. And I was like, that's a good panel right there. So before we start, put your hands up if you have an attorney, a CPA, or financial advisor. Okay, so y'all lit. That's what's up. So we're going to go over today the importance of having that, the roles for each one, and then, of course, if you guys have questions in between, please feel free to ask questions. Before we start, I'll let you guys do a quick intro, what you are and what you do, who you are and what you do.
Yeah. Good evening, everybody. Thank y'all so much for coming out here. Like KG said, my name is Soluto Uba. I'm the founder of the Uba Law Group. We're a law firm that makes the legal side of business easy to understand so entrepreneurs aren't scared out of pursuing their dreams. Basically, I help people create businesses that protect them. We also do intellectual property, so you can own what you create. Ownership is the new black. That's one of our campaigns at the firm. Pretty much, we just help people understand the legal side of business and strategize so they can take full advantage of entrepreneurship, because a lot of us aren't doing it the way that we should be doing it. So look forward to speaking. Look forward to the great panel that we're going to have. I think it's going to be a great night.
Good evening, everyone. My name is Eileen Pesante. I am the owner of Next Gen Tax and Financial Services. Next Gen Tax and Financial Services basically services entrepreneurs, small business owners, self-employed, independent contractors, with not just preparing your taxes, but with also giving you a system. So generally, I'm going to go into my whole spiel, but I won't dive in too deep. But it's basically a boutique company. We assist with the preparation, planning, bookkeeping, payroll, life insurance, and everything in between, because you business owners have a lot going on. So that's Next Gen Tax and Financial Services, and I will pass it on to...
Hi there. My name is Deshauna McKinney. I am a private banker with Frost Bank. Essentially, what my role entails is helping individuals. I'm sorry, I'm so nervous. I help individuals to. I'm a financial advisor. Jesus Christ. I help individuals to. With wealth advisory. And so what does that entail? That entails everything from personal lending to estate and legacy planning. And so what will your goals look like in the future as we plan for now? But then we also encompass your family. We talk about retirement. We talk about how you protect your assets and things of that nature. And so that's my role.
So that was my first question. It was about financial advisor, but let's talk about that for a second. Does anybody already have an estate set in place? A trust, retirement plans? Man, I love to see it. Two people, okay. So let's talk about retirement plans and building estates for entrepreneurs, right? What does that look like? When should we start? Of course, we're entrepreneurs, so we don't have a 401k ourselves, but what does like a retirement plan look like for entrepreneurs?
I'm glad you asked, because in my opinion, as an entrepreneur, your focus should always be on growing your business. And so you don't necessarily have the time to, place your efforts on the behind the scenes things like your financial planning. And so that's where I come into play. And for the early entrepreneurs, just having that relationship with the bank early on, that really establishes you. And so that when you have a need in the future, you're already connected with an individual that can help you or point you in the right direction.
Great point. I know you said early on, but for some of us maybe looking like, hey, I'm not ready for a financial advisor. When would you say is the right time, whether it's revenue-wise or somewhere in your business? Like, when should you actually be able to seek a financial advisor?
So I'm assuming everybody has a bank account. You can't function today without a bank account. So just like you process your personal assets, that's how you would take on your business assets. And so, you want to start off, again, very early on. Once you filed your paperwork and things of that nature, that's all we need with the county, like DBA paperwork or LLC, formation documents. That's all we need in order to establish a business account. And I can only speak for Frost in that there's so many ways to waive your monthly service charge fee and things of that nature to where you're getting a free account. And so utilize it. You don't have to have, $10,000 in it. You can start with a smaller balance and you grow from there. But I always encourage individuals, again, get that financial advisor, get that relationship with the banker early on. And then as you maybe, think about, well, man, I want to expand my business. Who can I talk to about a loan? Even if that person is not a commercial banker that can get you that loan, well, hey, you have somebody to talk to ask that question, like, hey, how can I get this money? And they're going to be willing to help because we're a bank, and that's how that's how we profit. We want to help you guys. We want to lend to you guys. And so I think that you should always start at the very beginning. Whenever you have established your business, feel free to come into a bank and establish that bank account as well.
I would just want to piggyback off of that as well. You really hit the nail on the head when you talked about building relationships. And I think all of us as entrepreneurs know, to some degree, it's not what you know, it's who you know. And that relationship that you have with people, especially before you really need to take advantage of it, there's a different effect when you know somebody and you can walk into the bank, this is my banker. And so they've seen you grow, they know who you are, boom, all right, we're ready for a commercial loan, we want to do X, Y, Z. Just having someone that knows you when they're in their back meetings and talking underwriting, all that stuff, and will go to bat for you really makes a difference. And so a lot of the mistakes that we see, just even from the legal side, we see people do when they're trying to grow their business is they won't have those meetings and won't make those introductions until they need something. And that's all right, but the smarter plan to be ahead and create those relationships that'll be beneficial in life is just talk to people, ask what they do, ask how you can be an asset to them, and you can refer them business and all these different things, because networking and working who you know is always going to be beneficial, and especially when you do it ahead of time.
And then just another thing to add, just like she said, the first step after you get your DBA or your LLC is getting that business bank account. Because what a lot of my clients, when they initially come to me, do is they mix their business and their personal expenses together. So when it's tax time or if we're planning, they don't know what they spent. They don't know what their income is. They don't know what their expenses are because they don't have that separated. So first step, get your DBA. Even before you get a DBA, you're considered a sole proprietor. So if you are, selling food plates, if you decide to start selling T-shirts, you are a business owner, even before you establish your entity. At that point, you need to start thinking about, okay, what do I need to do? Let me get that DBA to see how this is going to go before I jump into getting an LLC. Now I can get an EIN number. EIN is your employer identification number. This is what she's going to need to say, okay, now I can open up that business bank account, and now you can start flowing that income that you're getting from your clients or your sales or your products into that business bank account, keeping that separated. And trust me when I tell you that this is going to take the stress off of you, and it's going to take the stress off of me when that time comes and we're having to clean up the last year that wasn't kept in bookkeeping. So definitely just, again, to add to that, that's one of the first steps as a business owner.
So Luto, this was your concept, right, where I got it from, building a power team. Yeah. Kind of talk to us about that structure and why it's important, and then we can go to each person and kind of identify the role in their power team as well.
Yeah. So I have a problem, y'all. My wife says it's hard for me to make a point without telling the story, so I'm not even gonna fight it. So the story behind the power team is, I'm a lawyer. I work with entrepreneurs, but it wasn't always this way. I used to have a regular corporate law job. I worked downtown, and I was just kind of doing that, and I thought that was going to be my, my career. until a few years into the game, I couldn't see myself working that 9 to 5 forever, building somebody else's empire. Eventually, it came to a head for me when my wife and I got pregnant. Mainly, my wife was the pregnant one. But we were going to have our son. I kept on thinking, if I don't get out of this job now, I'm going to be stuck. I'm going to be trapped. Where I'm going to be trapped is something that kept on sticking in my head. So eventually, I quit my law firm. I actually started a real estate investing company. We were wholesaling, fixing, flipping, all that good stuff. But I got pulled back into the legal game because people knew me as the attorney, but the only thing I wanted to do was business law. And so when I came back and formed the Uber Law Group to help people form businesses, I started noticing that people in all different industries and sections of life had the same type of problems when it came to creating a business that not only is going to be profitable, but is also going to support the type of life that they wanted to live. The whole point that they got into the entrepreneurship game. So we started to see the same types of questions, the same types of problems that, hey, your funds are all commingled. Not only can you not reconcile your taxes, you're probably going to blow up your LLC protection because you're not operating properly. You don't have a bookkeeper. You don't have a wealth planner. You don't. And one of the questions a good friend of mine asked is, "What's your relationship with your accountant and your attorney?" That implies that you have a relationship. So the idea of a power team came from, at each level of growth in your business, what are the things that you're going to need to do, what are the strategies you got to put into place, and what are the relationships that you need to have to make your life easier? Because I started to notice that us entrepreneurs, we got that type A, jack of all trades, I got to wear all the hats mentality. And sometimes that's important when you're getting out the mud, but if you do not delegate and start to have these roles and responsibilities go to other people, you will always be stuck in the mud. So I tell people, hey, I'll explain some of the legal concepts to you, but you don't need to be a lawyer. This is what we're here to do. So your power team are people who are experts in their field, who know what they're doing and who understand your business and who you can entrust and delegate things that you don't need to do so you can focus on making money. So primarily we focus on the attorney, wealth advisor, CPA, bookkeeper, but then even as the business continues to matriculate and mature, everything from life coach, family strategist, all those different things, because you as a business owner and a person are a complete person. So all these things come into play when you're building your business, and especially as it starts to scale and launch off. So that's kind of the origin of the power team. Indeed.
Do I check in when I foresee it's time to grow, or what
Yeah.
does it look like?
So that's actually one of my favorite questions, and it's very practical today. Today is tax deadline day. Typically, when I talk to clients and we're going over their business, how everything's going, we're talking about their taxes, it'll be January, February, and like, I'm trying to figure out this tax strategy. And tax planning time, I tell people, is in October. Tax planning time is beginning of Q4. When you have an understanding of how the game works, you can start to play around with it. It's fun for me. When I quit my law firm job and got into real estate investing, that's when I learned about taxes. And then when I came back into law, I realized that a whole bunch of people don't understand how the game is, so they're literally throwing tens of thousands of dollars away, giving it to Uncle Sam every year. So when you talk about what does it look like to build that relationship, book an appointment. Pay for a consultation, 30-minute consultation, maybe every quarter, and just talk about what's going on in your business. And we're just regular people. None of us are anybody special or whatnot, but building that relationship is how you start to grow, and you'd be surprised. I have clients who, just because I know their business, I remember something randomly that we talked about a year and a half ago, saved them like $5,000 just because I brought it up and brought it to their attention. That relationship is how you build it. And so whether or not you have quarterly meetings, built that equity and that rapport before you need it, and you'd be surprised how much people will go to bat for you.
Okay, and then just to add to that, it's also who you're working with. So what I always tell clients is think about your industry, and when you're looking for either a tax professional or a CPA, is that person well-versed in your industry, or are they willing to become well-versed in that industry? Because there's a lot of preparers out there, there's a lot of even CPAs that they might just focus on real estate, and you are in the beauty business, or they might focus on, you know, something completely different that's outside of what you're doing. And it depends on the person for you to determine and build that rapport and say, okay, they're willing to go the extra mile and do that research. They're willing to figure that out for me. So whenever you're thinking about, let me try to even see what I need to do throughout the year, definitely book the consultations. And sometimes I come across clients, new clients, that they're like, well, I don't want to pay that fee. You know, I don't want to book a consultation because I don't want to pay that fee, or that might be too much. But if you're thinking about it from a business perspective, that's a write-off. So if I'm connecting with him and I'm trying to strategize what I'm going to do this year for my business and before December 31st, because if you're going to do anything, it needs to be before then, it's like that's also something that you put into play. It's like if you want to continue to strategize and gain that knowledge of what you need to do, at the long run, you're going to win. So it might be $100 here for this consultation, or whatever your CPA or tax professional charges, but as a business perspective, it's like, okay, well, that's a write-off. I'm not even worried about that. That's going to lower my tax liability. So what's the next step? Because when you speak to him or myself, we're probably going to give you a strategy on that call that's going to save you $15,000 versus you, you know, with you just spending $100 or $50 or whatever you know, the fees are to get that hour conversation. So that hour conversation is going to save you in the long run. So I would generally say quarterly is a good time. My clients reach out to me, Eileen, I'm going to purchase a new car. Is this a write-off? Is it 100% business deduction? What's the tax code? Last year was 100% depreciable. This year is going down to 80. So knowing also, well, what's the tax laws? Because every year there's going to be a change. And if you don't know what that is, and if it's like, you know, too complicated, or because I work with a lot of creatives, they just want to create. I just want to focus on my art. This over here is very confusing. I like to break it down. Well, let's break it down. Let's set up a plan. Let's set up some steps. Let's get your action plan going. Now let's automate it. So this part is working for you, and you're focused on what you're wanting to do. So that's the biggest thing. It's definitely depending on where you are in your business and what your projected goals is for the next 3 to 6 to 9 months, it's like, okay, do I need to speak to my CPA quarterly? Or maybe just twice a year, and make sure that before the end of the year, I'm doing what I'm supposed to do.
And as a caveat to add to what they both have shared, as far as financial advisors, we can use that term semi-loosely. So that can be anyone in a financial institution that can help you get to where you're going in that time point. And so your financial advisor, when you begin, may be a personal banker. And they may just be telling you, you know, this is how you go about establishing these accounts. This is how you monitor these accounts. You know, you get your credit score, you know, sent to you. And I know this is personal, but you get it. You know, this is how you access, you know, your accounts online. This is how you process transfers. We have certain parameters in place between commercial accounts and our personal accounts. And so they can help you explain, oh, why do you guys keep this separate? And then I have several clients that are calling in asking me those tax questions, and I am not a tax expert. And so when we talk about, you know, building your team, you truly do need us all to work together. But one thing that I can assist your CPA with is having all of those tax statements ready, having any type of 1099s or things of that nature ready and prepared to send over or share with them. And then additionally, he's going to be helping you establish your entity documents, but also as your career evolves and you continue to grow, we talked about retirement. So entrepreneurs don't have 401ks, but they do have IRAs. And so I help you establish the account, but if you want to place maybe some assets in a trust because you're ready to start looking at protection plans, he's going to help you establish those trust documents. And you can iron out with him, you know, what you want to place in the trust, who or what you want to protect. And then once he has those documents ironed out, I'm going to come over and say, okay, let's establish this account. Do you want to run any finances through this trust, through this actual business? And then again, there's going to be tax implications with that. And so again, we all work together to give you a fully comprehensive, hopefully experience that again allows you to place all of your focus back into your business.
That was well said. Give it up for them real quick. That was well said. You brought up trust. I want to talk about that because I don't know if y'all follow a lot of social media platforms about financial literacy, but trust has been like a really trendy topic right now, super important. Can you talk to us about why somebody should set up a trust and what the actual looks like? Because I think there's a quote that says, somebody can help me, that like you own nothing but control everything. So talk to us about the trust.
Yeah, so in kind of like the most general sense, a trust is a type of relationship with your assets and yourself, beneficiaries, and so on, and name the trustee. So one of the biggest things that people get twisted about a trust is that just forming a trust is going to protect you. Forming a trust will not do anything for you if you don't do what's called funding the trust. The trust has to have assets and things that it owns in order for it to give any protection. So how you want to do that will depend on your situation, but the big idea is all of this work that we're doing and this legacy that we're trying to leave and these things that we're building up, we have to structure them in specific ways to, number one, take advantage of the law, but then number two, also protect ourselves, and number three, leave our legacy on our terms. So one of the things that you typically see with people who have trust and have these big accounts is, hey, I know my family, maybe it'll be a grandmother, grandfather, I know my family, this son, he's got his head on straight, this daughter, she's got her head on straight, this child, he's just crazy, so I can't just leave him money. And so you can set the terms of how your assets are administered throughout the years. You know, if you have children, grandchildren, people they need to take care of, trusts are great assets to do that. Trusts are also used in different capacities with real estate and different assets that you're protecting. But the big idea is you have a plan to understand how your things are happening, to how your things are being administered. On top of that, one of the biggest ways that wealth is squandered is during the probate process. So probate is what happens when you die and your assets need to be settled out and distributed amongst the people. So if you have a will, then your assets will go according to your will. If you don't have a will, then you're what we call intestate. You've died without a will. You no longer can control where your assets go. They're going to go based upon default rules by the state. So at a base level, we want everybody to have a will. A will is great. But what people don't understand is that even when you have a will, you have to probate that will. You have to take the will to court and have the court officially administer it so they can put their stamp of approval on it and say, hey, everything has been done properly. Guess what? The court don't work for free. The court takes a portion of your estate and your assets. I believe one of the most recent stories was Chadwick Boseman. His estate was about $3 or $4 million, and the court got about a third of it, because he didn't have a trust in place. That's what the process is. When you have a trust, the assets do not belong to you. So when you die, the trust has the assets, and the trust just executes the plan. So a lot of these things are part of the wealth building process and are part of the conversations that you're going to want to have. Just as you're starting to matriculate, you're starting to grow. Another quick thing that I love to throw at people immediately: life insurance. You need to get it yesterday. Got to get it yesterday. It will never be easier to pass down wealth to the next generation than it is through life insurance. My wife and I, we got married 9+ years ago. We got life insurance policy for stupid cheap. I don't know what we pay on it. It's been on auto pay for the past 10 years. And so, but get that, because that's a huge way to add assets.
Yep. And that he said exactly what I wanted, just exactly my thought. Because what I come across is most people don't have life insurance, especially for my self-employed, independent contractors, business owners. And I think people don't even think to look into, well, how much would that even cost me? They just think that's too much. You could get a life insurance policy of $250,000 for less than $75. A term life policy. There's a bunch of different policies out there. There's a bunch of different life insurance policies, but you can check to see what works best for you. And one of the easiest, one of the cheapest ones is term life insurance. And that just allows you, even with $50 a month, even with $30 a month, to get something, because we build up these businesses, we work. Even if we're not in our 9-to-5s, we're working to build up our businesses, but at the end of the day, life happens. So if something happens, what are you leaving to your children? What are you leaving to your siblings? What are you leaving to your parents if you happen to leave before them? And if it's just your business and then it's upside down because you don't know what your income or your losses are, then you're really not leaving anything behind. So that's the first thing that I would even suggest anyone to get, whether you are just starting off or you have a business. If you don't have life insurance, get that in place, make that payment, get that established, because that's really, really going to protect your family.
I got a question about the type. So I have a term life insurance, right? That's like standard.
Yes.
But I keep hearing about whole life and how there's benefits associated with that. So how should someone go about
You can. I personally do term life. I don't do whole life. The thing about whole life, and everyone again has a different perspective on it. I think my personal perspective is when it comes to life insurance, it's for insurance. So if you are establishing your business, if you're establishing your entity, if you're establishing your financial advisor, and you're doing all of these things out of thinking about your life insurance policy, then you're going to be able to go and get a loan to fund that business or fund that real estate transaction that you're wanting to do versus tapping into your life insurance. Because once you start tapping into that whole life, your death benefit starts to decrease, there's so much to it that whenever I got into the industry and started to learn about life insurance, I said, y'all are doing what to people? And if they die, y'all are keeping their money. And if you have a life insurance policy through your employer, it's really just accidental. So if you happen to go into a coma and you are on life support for 10 days and your life insurance policy says that you're supposed to be on wherever your company is established, you're supposed to be at work on September 1st and you pass away 2 days before, they don't have to pay out. So just because you're paying for a life insurance policy through your job and you think, okay, it's very small amount, I got life insurance, look at your policy details. Look at that. I had one client, his family member was paying on a policy for 30 years. His father passed away. He had a wife, he had a son. He working for Plano ISD thinking that he was okay. Passed away because he was in a coma and he wasn't in school on the first day of the month. His policy didn't pay out, even though he paid on it for 30 years. And it's because we go into, oh, that looks good. We're looking at the face value of the information and we're not looking at the fine print. Look at the fine print, pull it up and see if that works. When I found that out and I was still in my 9-to-5, I canceled that and I went and got an outside policy. I wanted to make sure that if something happened to me, I have 2 girls, I have family members, I'm like, they're gonna be okay. If I die, you're gonna be rich. That's my perspective. It's like if I'm working to build wealth and I'm working and that's my goal and I'm putting all of these things in place, great, but I got kids. So if I pass away, y'all automatically gonna be rich, but you're gonna have the knowledge of how to actually continue that. So that's the other part of financial literacy.
Absolutely, and to add on to all of the great information that they just shared, to make it kind of stick together. So on my end at the bank, I see this happen all the time where individuals, they didn't have a will, or they had a will, but they didn't set up a trust. And so they're still fighting with the courts and things of that nature. So there's delays. Mind you, they're dealing with the loss of a loved one. And so there's extra stress there. You don't want to put that on anyone that you love. But additionally, what I really appreciate is I think when you understand, again, how our relationships all interplay. So we talked about trust earlier. Trustees are going to be the ones to manage those trusts, and that can be, it can be anyone. It can be anyone, and he can help you, iron out those details. But I say that to say, once we establish the trust account and we have the trustees, again, those assets that are in there, if someone were to pass away, the trustee, even if one trustee, there can be multiple trustees, co-trustees, and so if one trustee passes away, then someone else has the ability to step up and take over. But I just say all that to say the bank is here to help you, and I think that oftentimes it's taboo to talk about finances and to be transparent about it. I think also people are sometimes embarrassed about what they don't know. Please do not be embarrassed. You guys would be surprised how many people do not know. They just don't know. And so don't be afraid to come in and ask a question. And like I said, we're going to point you in the right direction. In building those relationships, I think someone asked, what does that look like? Nobody swings by a bank anymore. I know that's kind of old school, right? But I say that so you don't have to necessarily pop in to say hello, but feel free to call up someone, at the local branch, and just check in. Hey, I can't tell you how many conversations I have just checking in what's going on with the economy. They're asking just random questions, but I appreciate that, because then that strikes another chord of thinking for them. And then we can talk about something that really is relevant to them, like, okay, so Wall Street Journal Prime just went up. How would that affect if I wanted to get a business line of credit to, buy some things around my office, or to change my entire, first floor of my home into an office space that people can come into? Well, now we're talking. So now we're like, oh yeah, well, prime just went up. So you might be cautious of lending or borrowing in this way. You may want to borrow in this way. So it's very important to just attempt to have those conversations, and you'll be surprised the doors that are open.
And just really quickly, just to that point, I think one of the biggest opportunities is when a lot of people are doing something, you do the opposite. And so you mentioned how people aren't coming into the bank. That's an excellent way to build relationships that are extremely powerful. And so I recall, it's a silly story, but the point remains the same. Back when I was in real estate, I remember one of our contractors, him and his wife had a baby, so I brought them just a big thing of diapers. And we had another property a little while later, had an emergency problem with the roof. Legit, we're about to put this thing on the market in a week, have a roof issue. Emergency roof issue, called the contractor. He gave me a discount just off of the strength of the relationship. And things like that go a long way. At the end of the day, you're dealing with humans. You're dealing with people. So if it's bleak and dusty inside the bank and inside the office, they're not used to talking to people as much. If you're that person, it's going to mean something. And especially as your business is growing, you're developing that relationship, this is how you get that leg up, because a lot of people won't do that.
Just to add 2 points to that on what he said and what she said. On what you said. So if someone comes into the bank and says, if I can get this loan to build this office space in my house, now you can talk to me and I can say, well, now this is what you can deduct on your taxes. So you have a home office space. Now we're able to take a portion of X, Y, and Z to be able to lower your tax liability. And then building the relationships. Just in the insurance business, just to give a quick story, there was a couple who got insurance. The lady had a baby. They had another daughter. And they failed to put the baby on the insurance policy. But because they had that relationship built, unfortunately, that baby passed away at 9 months. They called their contact and let them know what was going on, and they were able to make some calls and still be able to say, okay, we're going to go ahead and issue you a $10,000 check to cover the funeral expenses, because they had that relationship, because they connected with that person. They continued to reach out and ask questions and just kept that line of conversation going, so that you can, once someone connects with me, I'm not saying that I kind of have to stop this, but I have clients that do book consultations, but clients have my number and they text me, hey, Eileen, and they'll shoot me a text message. And I'll respond. I don't charge for every time I talk to you. I don't charge for every question that you have. It's like we're continuing to build a conversation, because throughout the year, I'm going to be able to help you, and in the long run, I'm running a business, so you're also in turn helping me. So it's just like building up that rapport and building up a strong relationship.
And to add to that, it's perfect for you to do it, because these are relationships. I help families. You see what I'm saying? So once you go to these two individuals, or once you have a relationship with me, I then get to know your kids. And then once you're old and once you're retired and you're ready to hand off that business, or you're ready to just take your hands off of things, Frost has been the executor over estates for individuals. If they don't have, he was talking about how you may not trust, maybe a child, they don't have their head on straight or something, and so you can't entrust your business to them. Maybe they just need a little bit of time, and so in that interim, Frost can act as an executor. I forget what I was saying, but
And that's correct. And maybe even also if you have beneficiaries and they're under 18, you don't want to get life insurance and put your 15-year-old or 10-year-old as a beneficiary, because they can't pay that out to that individual. So if you connect with her, they have a system to where, okay, now we can take care of this until this person is of age. Is that right?
absolutely, yes, absolutely.
I have a question. So I know we're talking about building our power team, but how can we verify, I know relationship building, hey, I'm going because ABC, my cousin, my aunt told me to reach out to CPA or lawyer or financial advisor. But I know there's certifications that qualify you as that specific field. So can you guys talk about some of those websites that people can reach out to as a small business owner or entrepreneur to say, hey, this is how you make sure someone's accredited, and not just telling you he or she, right? Because everyone's financial literacy guru, everyone's an entrepreneur, everyone's a millionaire on Instagram, and dealing with their mom and dad. So can we talk about the realistic how to do that?
Again, it's going to be contingent upon how you define that. There are financial advisors, there were several different hats. My expertise is I'm a private banker at a financial institution, and so the way that I will help you is going to be based on the parameters that I have within the banking institution, if that makes any sense. And so we don't invest in Bitcoin, but that doesn't mean that you can, you know what I mean? So you go and find someone, and I don't know how Bitcoin, I don't know how that's like people are accredited in that way. I don't know. So I don't want to, misspeak, but I say that to say you would find someone that is in that lane and prominent, and I'm sure there's a way to vet those people. But oftentimes with us, we have accreditations like our licensings and things of that nature. CWS and things, if you know any of those acronyms, those will help you to understand their designation and their capacity to help you.
Yeah, and similar to that point, I think for conversations like this, it's way easier to verify if we're legit. You can check the state bar. There are all of the industry people have some sort of overarching organization that they answer to, but. Yeah, really to your point, I spend a good chunk of time with clients debunking TikTok lawyers and, Instagram CPAs. And it sounds funny, but you'll have people with a lot of money doing stuff based upon a reel or a TikTok, and it's just not sound. So to your point, there are a lot of people that have expertise that don't necessarily need letters behind their names. I think one of the best things that you can do is vet and look at a track record, and there are different ways to do that. This typically doesn't happen to me, but I've had one or two clients ask, can I talk to previous client? No, you can't. That's privilege. You can't know who my clients are. But as you start to work with professionals, people take their name seriously and their reputation seriously if they're legit. Like my name, there's no dirt you can find on our firm because we deliver the type of service that keeps us at an impeccable level. That doesn't mean that we're not humans and mistakes have never happened, but we have quality control, we have quality service, and we have good relationships with our clients. So whatever expert that you're dealing with, figuring out who's an expert and who's real is tricky. My hack, I find somebody I know that's very successful, and I ask them. And what typically happens is they spent money and wasted money and lost money on people who aren't real, and they give me a straight shortcut to the good folks. But it's a hard thing to do because there are a lot of fake people out there. But building that relationship, building the team, people who are successful are in relationship with successful people. So that's always been one of my biggest hacks: find legit people and ask them questions.
Just to speak on that too, you're starting. You came to this program, which is a great start of finding, credible people. There's also other organizations like the DEC Network. They host a lot of similar events, panels, cohorts, etc. So over time, doing your research, attending those, you'll see some people over and over again, and then you can just start to build relationships with them, ask them, the same thing, questions around, I'm looking for this. Who do you expect? So I'll say just stay in the rooms with entrepreneurs, and over time, you'll figure it out for sure.
Absolutely.
But speaking about relationships, I kind of want to ask this question. Do banks offer any programs or assistance actually connecting people with, like he asked, so like if I'm going to the Frost Bank, which I'm a client, and I'm looking for a CPA, do you have like a Rolodex, or can you connect us with somebody who's a CPA, attorney, et cetera, and what does that look like?
Absolutely. I'm glad you asked. Just like this gentleman said earlier, it's all about who you know. So networking. I can tell you that I don't know the last time I referenced like social media. I'm not going to say it's good for some things, but I take referrals. I ask people, who would you recommend? And so I say that to say I absolutely have CPAs in my Rolodex. I'm adding a CPA and attorney. But yeah, I absolutely have them in my Rolodex so that I can, again, give you that fully comprehensive approach to managing your wealth. It's very, very important. We couldn't fully help you without having the relationships with one another. And so, and if you have that's another way to vet someone. If you have a financial advisor that doesn't have any connections with CPAs or attorneys or other lending, credit repair, if they can't help you with any of those things, then that may be a sign to go and look for someone else.
Real quick, I want to kind of get your individual take. We talked a little bit about it in the first class about tax strategy, but I also want to talk about your input or your intake perspective on financial planning and tax strategy. What I mean by tax strategy is, I know there's like this thing where we want to write everything off, but like if we're saying in 2 years, right, we want to purchase a building, kind of walk us through that. Like, how can we make sure we do? For sure, but dive into that though.
Okay, absolutely, and that's definitely one that I feel like I've had that conversation so many times. What, it's Tuesday? Okay, I was gonna say this week, it's only Tuesday. So when it comes to the tax strategy and wanting to write off everything, obviously when someone files their taxes, the main thing that they don't want to see is that they owe the IRS. So that's one of actually the first questions that I ask, whether it's a new client. If I've built up a rapport and you've been with me for a few years, then I know what's going on with you. Like, I have that down. If you're a new client, I'm gonna ask you about your goals. What is it that you're planning on doing within even the next 3 to 5 years? So currently, depending on your business and what your income is and what we're trying to do, are we looking to deduct as much as possible legitimately to try to lower that balance that you see there, if you do have a balance? My goal is always, always, always to get my clients to zero. That's my happy point. If I see that you're at zero, I'm smiling. But if I can get you a refund, then that's always great. That's fine. I'll try to increase that as much as possible. But I'm trying to see you at zero. But if you tell me, Eileen, I'm looking to purchase a property, okay, well, then we need to show some income. And in turn, if we're showing some income, you're probably going to show that you have a tax balance. So you have to be prepared for that. And that's where, when you are a business owner, make sure that you have your system in place. It's like, again, I know how much income I'm getting. I know what my expenses are. I have a tax account. That tax account is, every time I get a piece of income from someone, from selling a product, from a service, I'm putting a portion of that in my tax account. So when that time comes that I have a tax liability, my cushion's already there. I'm expecting it, because this year, next year, and the next 2 years, I want to purchase a property. I want to purchase a building. I want to invest in something. So that's definitely, again, you'll get that information being able to connect with a tax professional, a CPA, building up that rapport and asking those questions. All right, and also planning ahead. So a lot of people say, well, I want to buy a property this year. I want to buy a house this year, because they start making a little bit of money. Plan ahead, figure that out. What does that look like? What type of house do you want to buy? What area are you going to be in? How much is that loan going to cost you? All right, now in turn, what do we need to do so that your tax return falls in line, so that your lender says, okay, you're a good fit, versus you can't pay this loan. You brought in $100,000 or $200,000, but you wrote off everything, so now you're only showing $20,000 on your tax return. That's what we want to avoid.
Absolutely. And to add to that, I see that more often than I had a client, talk about stories, right? So I had a client, and his net worth, amazing. He's a multi-millionaire. He owned a home, and it appraised for $14.5 million. So he's making the money to make these payments and things. And so he writes off everything, and he wanted to come to us for a HELOC. And there's so many parameters. As an entrepreneur, a HELOC, he came to Frost for a home equity line of credit. And so he wanted to take the equity that he had in his home. Mind you, his home is valued at $14.5 million. He didn't have a mortgage. The home was paid off. So to just draw that out, we can lend 80% of the equity that you have in your home. And so 80% of $14.5 million, that's a $10 million, I don't know, I'm not doing the math, but it's a huge number. It's potentially a $10 million loan, somewhere around there, ballpark. And so I say that to say, we were working on the loan, and I'm like, yes, this is right up my wheelhouse. I'm telling my managers about it. We could not do that loan, because as an entrepreneur, you have to realize that's your financials come from your business. That's your income. And so, yes, they're separate. You're going to have personal tax returns and you're going to have business tax returns. But because that's how you're paid, we're going to say, hey, we also need those business tax returns. We need the last 2 years of those business tax returns. And he had set up he taxed his way, or his CPA. It's great for him because he didn't pay any taxes for I don't know how long. But when it came time for the loan, we couldn't consider any income for him, because that's what his W-2s, not W-2s, that's what his tax returns showed. His tax returns showed that he wasn't earning, and even though common sense will tell you, how's he, making it day to day? We know that he has income. The bank knows he has the income, but he could not prove it on paper. Yeah. And because he could not prove it on paper, we declined the loan. And so when you think about that, he's like, and he was upset. And I was upset. That was a great deal, right? But, and so I'm like, you know, I've tried everything that I could. I took it to, I mean, I'm having meetings with underwriters. I'm like, no, this doesn't make sense. You have to, the paperwork said, and again, you're working with a financial institution, so we're gonna require that documentation. We're gonna require, every time we're gonna need at least 2 years tax returns, minimum. And so, and then when you think about if you're a new entrepreneur, again, you wanna start building that relationship, because if you are gonna want to, you know, build your business credit and things, you wanna start doing that now, so that in the future, when you're ready to take out that loan for your business, we can help you. And honestly, with the HELOC and tools of that nature, we can help you under your personal, like using your social, help you in that way to help finance some things that you want to do in your business. And so he was going to utilize a large chunk of that HELOC to reinvest. So it wasn't like he was just going to squander it, or he was going to go buy a yacht and just, you know, live it up. No, he was planning to reinvest and make some returns on that, but we couldn't help him. So that's extremely important.
Yes.
Like oddly specific. Okay, so intriguing question. So if someone bought a house, right, they're in historically low interest rates, but you go back and get a HELOC now, are you really losing in the end, or?
Oh, no, I'm so glad you asked. That's a great question, because a HELOC, we have a home equity line of credit, home equity loan, home improvement loan. These things can be second lien products. And so your primary mortgage that you go and get out, and I saw this a lot because during the pandemic, you know, mortgage rates was 2-3%. And so people are like, man, I want to, you know, tap into the equity in my home, but I do not want to refinance and get a mortgage at 5 or 6% now, because that wouldn't make sense. You're absolutely right. But you can keep your primary mortgage in place and have that 2 or 3% mortgage, and then the HELOC will tack in as a secondary lien. Does that make any sense?
Yeah, so then is that HELOC dependent on, all right, with inflation too though, looking at the home values, a lot of home values went up anyway, so it's taking basically whatever balance due on your mortgage now and subtracting it from the.
Yeah, okay, I can give you some arbitrary numbers. Let's flesh this out. Okay, so let's say we have you purchased a home 5 years ago, and the home is in Oak Cliff, and that area is appreciating like no other. And so you bought the home for $250,000, but now it's worth $400,000. But you don't know that. You bought the home for $250,000, and you've just been paying your monthly mortgage payments for the last, 5 years. Well, in that 5 years, all of those monthly mortgage payments, with the exception of interest, you've been making principal reductions as well. And so those principal reductions are equal to the equity that you're building. You're building equity. You're paying down the loan. And so now, 5 years later, instead of owing, if you got a mortgage that's $250,000, you don't owe that anymore. Now you only owe $170,000. That's aggressive. You only owe $210,000. I don't know. So now you owe $210,000 on the loan. Well, you come to us and you say, "Man, Deshauna, I'm interested in a HELOC. Can you tell me about that?" Okay, perfect. So your home, we're gonna say, what do you think your home is valued at right now? Well, it's no longer valued at $250,000. It's now valued at $400,000. And we'll go and get an appraisal to assure that and all of that. But if that appraisal comes in at $400,000, well, that's what your home is valued at. But you only have your mortgage here at $210,000. So now we subtract your home value, what it is actually worth now, the $400,000, the appraised price. We subtract that from your primary mortgage balance. So now your home's at $400,000. You subtract your primary mortgage balance of $210,000. Now you have $190,000, right? But we can only extend 80% of that in a loan. So if your home is worth $400,000, what's 80% of $400,000? There we go. 320. Okay, so very good. So your LTV, we can lend you up to $320,000 if your home is valued at $400,000. Okay, so $320,000. So you come to me and you say, okay, I want a loan. So $320,000, but you still have that mortgage of $210,000. What's the difference? $110,000. So now I can lend you $110,000 utilizing the equity that you have in your home, and that's money that's just sitting there, and you can use it for whatever. If you want to reinvest that into your business, you have $110,000 to do that. And what I like about lines of credit instead of loans. And this is something you really want to think about. But sometimes loans are beneficial. It just depends on what you're wanting to do, because you want to make sure loans are going to have typically fixed interest rates. Fixed interest rates, while the line of credit is going to have a variable interest rate. So you have to think about how that will change with the market over the term of the loan. Okay, so, but I say that to say, I like lines of credit because so now I've gotten you the HELOC and you have $110,000, but you're not ready to use it yet. You still have to find a contractor, and you're ready to order supplies, but you have nowhere to store them. You're just not ready to utilize the fund. What I like about HELOCs is you're not required to utilize them. With the loan, you're advance the funds all up front. So with a home equity loan, that $110,000, we're giving it right to you in your account. We can give you a cashier's check, but you're going to start paying interest on that right away from day one. With the line of credit, what I appreciate about that product is you don't pay interest on it until you touch it. And so it may take you 12, you just relax, It may take you 12 months to iron out things. You're still building your business plan. You're working with him. He's going to help you, establish your LLC. You're helping, you're building. You're still in the building phase. You're still building productive, but you just don't have a need for that money right now. But because you've established a relationship with your banker before you need it, when you do need it, it's going to be right there, and it's going to be really easy for you to access. So does that make sense? Okay.
That was a great point. Any other questions? Yes, ma'am.
So with the line of credit, once you pull from it, it starts drawing interest. Once you pay it back, you get
That's what's so great about it. Absolutely. It's like think about the product like a home secured credit card. And so when you have a credit card and you have a credit limit of $5,000 and you pay, you spend and you pay up your credit limit and you charge it up to $3,500 because you've been bad, and you went on a shopping spree, and then you get a huge bonus from work, or a lot of clients have come and supported your business, so you're like, oh man, I get to pay off this credit card, and you pay it off, and then you get you have that allowance to you again. It's the same thing. So if you lose half. Yeah, so if you use a portion of it and pay it back, you have that portion again to use.
I was asking about the fees, like
Oh, I'm sorry.
like you said, you started getting interest on it. So like say if you paid it all back and it's just sitting there, would you still keep getting fees, or you don't start getting fees to use it again?
Exactly, no. So you only pay interest on the outstanding balance. And so if you only have $20,000 out, you only pay interest on that. And then if you say you just pay $10,000 of that back, you're only paying interest on the $10,000. Exactly, absolutely. I don't know.
Regarding your business, there are bank fees that you're able to write off. There's bad debt that you're able to write off. So it depends on what that looks like. And that's why you should talk to your CPA throughout the year, so I can know what you're doing, so I can tell you if you can or not.
I had a friend that said she needs a CPA that's not afraid to go to jail.
Listen, I tell all my clients, no, that's
I need to see
I
how.
will not be going to jail for anybody. What I will be doing is strategically utilizing the tax code to your benefit. So I will, and that's the thing. That's, and I get this question a lot. Well, what's the difference between a tax preparer? What's the difference between a professional? When I started off, I was a tax preparer. A tax preparer, I always say it just depends on the person, because when you start off as a tax preparer, you don't have to do anything but pay $30 and get what's called a P10, which is a code for you to be able to submit someone's taxes. That's all. They don't need to have. They should have some knowledge, but that's it. Once they have that P10, they can do your tax preparation. Most tax preparers who are just starting off are just data entry. You're giving them your W-2, you're giving them your specific forms, and they're entering that. Now, if you want to actually, if you're running a business, you want to strategically understand what's going on with your business and your finances. You want to have someone who understands the tax code, and I'm able to apply it. Now you have a business, you have family members, you have kids, your kids are a certain age, let's hire your kids in your business. This is going to be a specific deduction, and this is how you're going to set it up. This is what that plan is going to look like. This is what your payroll is going to look like. This is what your account is going to look like, and this is how you're going to transfer it to them. Or I have a 14-year-old. She gets a direct deposit every 2 weeks. She works in my business. My 6-year-old is getting ready to work in my business. Saturday morning, I was teaching her data entry. Little things like that, but you have to have a specific description. Now we can also look into the Augusta rule. We can look into different tax strategies and say, anytime I'm giving a strategy to my client, I'm giving you the code so that you can go back and you can verify that, and you can have that to reference. So I went on a run. I forgot what your question was, but go ahead.
No, you mentioned one of my favorite strategies. That's paying kids. One of the things that's really dope about the social media and the internet age is paying teenagers. Teenagers make great webmasters, social media managers, and half the times they're more on it than folks twice their age. And so, why not? Okay, so the beauty of the tax code, and I love talking about this because a lot of business owners are very, very intimidated by the tax code. So I shared my story. I quit the law, went to real estate. When I went to real estate, that's when I fell in love with taxes, because people talk about loopholes and all these different tricks. The tax code, they're not really loopholes. That's the intended meaning of the tax code. So the big picture that I try to tell clients behind taxes is the government doesn't have a service, does not have a product. It makes money when you make money. So for the people that are entrepreneurs and job producers, you help people make money and have jobs and be able to afford their house, take care of their families. You help society function at a rate that's extremely dangerous, because just as successful as everybody is, you could fail. You could lose all your money. So that's a big risk. So in order to encourage everybody to take that risk, there are a lot of incentives in the tax code. So the tax code is just a book of incentives. When the government wants to promote activity, it'll put incentives behind it. When it wants to discourage activity, it'll put disincentives behind it. So when we talk with clients about, what should I do, what's in the just figure it out and read it or talk with the expert. But specifically when it comes to kids, that's a great, number one, if you can justify it and you're legit. But that's a great strategy, because on account of inflation, the increase of the height of the deduction that you can take just keeps on growing. I believe this year it's like 13.5. Yeah. Exactly. And if you can legitimately do services worth $13,850, you've just lowered your taxes that amount by doing what you're already going to do anyway, number one. Number two, but if you have kids, if you have people that you're already going to pay for, I just came from swim class with my kids and came all the way up here. These are things that we're going to do anyway. What would it look like to pay your kids for things that you would have given them money for anyway, get a tax deduction, they learn about money, they have their own account, all that good stuff is set up, and you save money. The whole beauty of the tax code as a business owner, and I want to say it very strategically because sometimes people will go off the deep end, but we talk about something called the conversion principle at our firm. As a business owner, you can convert personal expenses into legitimate business expenses by adding a legitimate business activity. So if you understand what those activities that the IRS wants you to do, what the IRC says, the Internal Revenue Code talks about, you can start to do what the government is already benefiting you to do. So when we talk about, hey, paying kids, writing off the car, all these different things. I know the internet has just kind of made everything look scammy, but there is a lot of legitimate basis behind a lot of these things. And your job as an entrepreneur is to figure out, what am I already doing, and is there a business incentive? My wife and I just came from Cabo last week. We have business incentives to do that. There are things that we can write off from that trip. We're taking another trip in the summer with the whole thing. All these different things work together. So you feeling empowered and comfortable and connecting with experts that know how these things work only enhances what you're already doing. I tell folks, as an entrepreneur, I don't want you to add stuff that wasn't germane to your industry. Do stuff that you're already doing, figure out how the tax code works with it, and then accelerate from there, and make sure that you do it legitimately.
And also make sure that you have documentation. That's what the IRS wants to see. So if you are taking a business trip, which all trips, there's no more vacations. If you're a business owner, that's a business trip. Don't take a vacation, take a business trip. You do your business and then you leisure. But you have your documentation, and speaking to someone like myself or with him, we can help you set up that system and say, this is what you can do. Don't bring me a box of receipts. We're not doing that anymore. We are setting you up with a system, and it's going to automate, and you're going to be able to pull your P&L at the end of the year, your profit and loss statement, and we're going to be able to actually have that steadied throughout the year for you. And then just going back to hiring your kids, what that means is when you have a child and you hire them to your business and you give them a specific description and they are actually working in your business and you're paying them a certain amount, now you as a business owner have that as a deduction. But to take it a step further, if you're paying them the standard deduction of $13,000 this year, $13,850, they don't have to pay taxes on that. So you're able to take that as a deduction. They're not paying taxes for that. You give them a portion of that money so that they can spend, save, and then come to her and they can invest in a Roth IRA account, because now they are actually earning income. Now she's going to be able to set them up with an account to say, okay, now we're going to contribute to this account. That's going to start to grow tax-free. So it allows them to start building for their retirement at a young age. So this is why having a power team in your business is very important, because without that, unless you go off and do your own research, because I'm one to research everything that I don't know and try to understand it at some level, then you have someone to do that for you. So you don't have to take that time away from your business or your personal life to figure those things out. We can have that consultation, sit down with you, and I can say, okay, now go to him, and he's going to set you up with your entity. Or he's going to set, or he can send them to me. Okay, I can set you up with the payroll. I can help you understand that. Now I'm going to send you over to her, and she's going to help you with your retirement accounts. So that's the importance of, going back to the importance of a power team.
Absolutely.
Quick question. Go ahead.
I have two questions. One, what is the age that you can hire your kids into your business? And my second question is, how do you turn a vacation into a business trip?
Absolutely. There is no specific age that the IRS has stated for you to hire your kid. They have to have a legitimate job description in your business. My Giselle, my daughter, has been working for me for the past 3 years, and she does office work. So whenever it's tax time, and I have a lot of, again, I don't have people with boxes of receipts anymore, but that's how she started off. She was sorting out. She was picking up my office. She was doing tasks that she could handle. So you have to have that specific description. You have to have it detailed as to how you pay her or pay your son or daughter. So for her, I set her up. She's been having a checking account since she was 8. I set her up and I submit direct deposits to her, and I pay her a certain amount. Now, throughout this process, you're also talking to your children. You're helping them understand this, because now I know I grew up without any financial literacy understanding at all whatsoever. I didn't learn that until I was a young adult, and I was like, what? Why wasn't I taught this? And it was just so frustrating to me that that conversation wasn't just common. So I made it a point to, now my kids are going to understand this from a very young age. So whenever they decide to leave the house, it's going to be like the back of their hand. So it's just a matter of actually understanding the details of how you have to have that laid out. And when someone has a consultation with me and we talk about hiring your kids, I actually send them out the steps. This is what this needs to look like. So that if the IRS did at any point decide to audit you, all you have to do is provide that information to them. Because that's what happens with going into audits. They can happen red flagged or randomly. And you just need to be prepared with the backup. You need to be prepared with that. Business trips. Whenever you are deciding to go on a trip, you have to conduct business. So if you decide that you want to go to Cabo or you want to go to Miami, or what, I know y'all just came back from Miami, so
Go put
if
my
you're
business
going
out there,
to
Malik.
Miami, you
I'll play.
you conduct business. You're
course.
going there and you are having, if you have a staff or a partner, you're having a team building scenario going on. You are, whatever your business entails, whatever your industry is, what you do on a daily basis, you're figuring out, you're doing that at a different location. Now you're gonna have that documentation. You're gonna show what it was that you were able to do. If you're gonna go out to eat and we're talking business, because I feel like all the conversation is always business. If I invite KG to dinner and we're talking business, that's a business meal. That's now, last year we could write that off 100%. This year is now decreased to 50%, which is crazy. I know. But different things like that, understanding the strategy is understand the documentation that you have to have and have that available. And as soon as you do that, you spend 2 hours team building, planning a strategy for your, the next quarter, whatever it may be. Now we're done working. Where's the beach? We're about to go have some drinks. We're about to go to X, Y, and Z and enjoy ourselves. And another, just to add, if you are doing it over the weekend, generally with a business trip, yes, we're going to hit them with the Friday and the So generally, if you are on a business trip, it's supposed to be Monday through Friday that you can write off. If you are staying over the weekend, to be able to write off your deductions or your trip expenses over the weekend, is you have to conduct the business that Friday, and you have to be able to conduct business on Monday and then leave. You can't leave on Sunday and then write off your expenses for the weekend. It would only be weekdays. Okay, but that's how you can include that weekend is, be there Friday, leave on Monday.
That's a gem right there. So I left like at 4 a.m. on Monday. Would that count? Does that count? I mean, I did now.
At the airport lounge.
I was. I was.
You were on a Zoom session, you were, emails, you were setting up a business plan, whatever it may be, as long as it was business, and you have that documentation, you do that.
One of the big things really quickly that we talk about, particularly with my business clients when it comes to their LLC protection and creating that strong foundation, the language that I use a lot is leave a paper trail. At any point, I need documents, I need records, I need evidence that you were doing what you were doing, just to, number one, give you peace of mind, but also to validate the legitimacy of the expenses, the activity that you're doing. So all of these things, and I remember when I was first learning about it, like I would be reading through the tax code and books like 3-4 times because it seemed scammy. It seemed too good to be true. But the fact of the matter is, like I said, the IRS is trying to encourage certain behavior, but you have to document and legitimize it and show that you were doing what you said you were doing.
And let me just add to that in regards to documentation. Don't think that you have to sit there and write all of this out. You can. They can accept a ledger. They can accept a journal. But you can automate. There's so many different apps out there. Everlance is one free app. Mile IQ for business mileage you can download on your phone. This, if you drove from work to this is continuing education. This is a write-off. Yeah, you being here for free, you drove, so that's business mileage. That can be added to your tax return. So, look to see what works best for you. Everyone's a little different with the way that they like to keep their documentation. The IRS doesn't require you to keep it in any specific form or fashion. They just want you to have it. So whether that's an app that you have and it's automated for you, perfect. That's picking up, there's a lot of apps that will actually track your expenses and track your mileage at the same time. So at the end of the year, you're pulling that report. With your receipts, I do always encourage people to keep their receipts, but keep it digitally. Take a picture of it, or utilize an app, or if you have. QuickBooks has a great function as well, but the thing about QuickBooks that we were talking earlier is a lot of people get QuickBooks and then they don't do anything with it. And then at the end of the year, they have all of these transactions that they have not even touched. So if you're not going to actually do that, now your QuickBook fee is deductible. You can write that off. But now you have 12 months worth of transactions that you didn't do anything with. So bookkeeping, consider hiring a bookkeeper. A bookkeeper, that is a write-off. And if you're not going to do that, simplify it. Again, find an app, find something that's going to be simple for you to track it automatically so that you don't have to worry about that. You know that part is being done.
And to add to what they just shared, I want you guys as entrepreneurs to really think about the importance of this, because when you're working a 9 to 5, like I am, we have the benefits of vacation. We have sick time. We have, you know what I mean? And we have paid leave. So you guys don't have that as entrepreneurs. So I think it's very important and incumbent upon you to understand those things, but that benefits you. I think you need those things. And so if you are taking some time away, you need to understand how you're still getting those benefits that you would as though you were at a 9 to 5. You need to have that IRA set up. Oh my goodness, so important. Talk to us. We have at the bank, we can tell you your annual, limits that you can contribute and things of that nature. And obviously they can help you with that as well. But these things, that's your retirement plan. I have, the bank matches whatever for me, but for entrepreneurs, again, very, very important. And I think that in your haste of just focusing on your business, some of those very, very important things like vacations or retirement planning, those kind of things fall to the wayside. And so you want to make sure that you're keeping those top of mind.
Absolutely. Yeah.
Yes, back in the.
Question about writing off things for health and wellness, right? So our 9 to 5ers get all the stuff, right? But for entrepreneurs, we have to pay for our own health insurance or chiropractor appointments, whatever. Like that's the one part of my tax strategy I don't have an understanding on how to maximize it as a 1-3 person business.
So with those types of write-offs, there is actually a portion that you can write off as a business owner, even with on your Schedule A, which is your itemized deductions. If you are paying out-of-pocket expense for prescriptions, for doctor's visits, for dentist visits, you are able to write that off. You're able to add that. Now, when it comes to what we call the Schedule A, the itemized deductions, it depends on what your standard deduction is. So this falls with your filing status, whether you're single, head of household, married filing jointly. I get a lot of married filing separately. Clients, and I'm like, well, why do you do that? And if someone has a specific situation, I understand it, but generally that's the highest standard deduction. But it depends on what it is that you are actually paying for. Now, if you're paying a gym membership, that's not a write-off. If you are a personal trainer, that can be turned into a write-off because that's your business. So it definitely depends on what it is specifically, but that is a portion that you can actually add onto your tax return as a write-off.
Yes, I had a two-part question. So as an entrepreneur who wants to build a power team, like the fee that I would pay you would go under my operational expenses, right?
Depending on.
So it can. So the kind of the lawyer CPA answers maybe. You know, there are terms under which all that can happen. But go ahead, finish your question.
Yeah, that was question 1A. So question 1B is, so for somebody of your caliber, like I'm just trying to put together the numbers in my head. What would it look like to have somebody like you all on my team? Because I don't want to have a heart attack when I call you.
Yeah. So I'm actually very glad that you asked that question. So for the first answer is professional services are typically an expense that you can deduct as a business. Those are things that you need to operate your business. But when it comes to what does it look like to hire a power team? What does it look like to get in good relationship with the bank, a CPA attorney? One of the things that I'll tell y'all about the evolution of my business, just from the attorney side, from the business owner side, is just like you want a ideal relationship with an attorney or a professional, I want ideal clients. So we run through our whole business model. We have different things like that. We have our ideal client avatar, what that looks like, how to attract those types of clients. And part of that, for my experience, is my pricing. There are other attorneys that do what I do way cheaper. I tell people, you know, sometimes you'll get what you want, but you're not going to want what you get. Because I'm looking for the type of client that is invested in their business, we have certain structures. So we have a free discovery call, but we also have a paid consultation. Eileen pointed to it before. Anytime you're paying a professional money, we're getting the short end of the stick. You're getting more value than what you're paying me for. I charge people to make sure that they're serious because, I mean, it's as you can tell, I can talk about this stuff a little bit, but it's hard for me to stop sharing some of what the knowledge and the wisdom and the strategy is. But a lot of times, if you do not pay yourself, you will not go far. You have to be, even I come from the real estate background, you have to have skin in the game. You cannot get a hard money loan. You can't get any type of funding for free. Anyone who's giving you money must see that you are personally have a stake in it. Otherwise, you're not going to value it. And the same thing with your business. If you're forming relationships with people that are going to help you protect your assets, save money, grow your wealth, that is invaluable. There's strategies, you know, we do consultations and help people understand tax strategy as well. And there's strategies that I've given a client that has literally saved them $13,000 the first year, $15K the next year, upwards and upwards. That costs money for them to be able to access folks like us to a certain level. I got a wife and 2 kids. I got stuff to run. We have a team. We're running a business. So obviously, you know, you got to make money. But on your end, I set prices, and I want to work with clients who are invested, and I make you work through the discomfort of having to pay something that is going to cost you something, because I need to know that you're invested and you're going to put in the effort and the work. We're getting to a point where I don't necessarily need, you know, certain people's strategy consultation fee, but I need to know that you're serious because my time is valuable. So depending on needs, so real quick, just at the Uber Law Group, I came from the law firm model. One of the things I hated about law firms was billing time. We used to have to bill a tenth of an hour. I'd have to give an account for every 6 minutes. I hated it. So the majority of our services are flat fee services. We have LLC packages, trademark, intellectual property packages. We have tax strategy consultation, all this stuff. Most of the stuff is flat fee. We have a free discovery call, but if you want to get legal advice, we have a strategy consultation that starts at $100 for a 30-minute consultation. We learn about what you're doing, create a strategy to help, and a game plan to help you accomplish those goals. But depending on what you're going to need to do, if it's in our practice area, we typically have a flat fee assignment for it, and then we're also developing more retainer models because we're working with businesses that just need continual support. And at the end of the day, entrepreneurship is a lonely world. Sometimes it just helps to have a call like, hey, am I about to go to jail? No, you good, you good. All right, and then that's the boost you need for that month to keep it moving. So that's kind of where our model is. Everybody works differently. There's some people who have a higher price, there's some people who have a lower price. One thing I would tell people to understand is don't ever go at a race for the bottom. There are people cheaper than me, there are people cheaper than the people cheaper than me, people cheaper than, what's the value that you're looking for? Who do you connect with? Who do you resonate with? As an attorney, I come from the formal world. I used to wear suits and go to court and all that stuff. Me wearing this jeans and t-shirt made me uncomfortable for like first 2-3 years of my practice. I'd kind of freak out because are they gonna take me seriously? But who you are attracts the people who are called to you. Ownership is new black is something that we embody and we believe. So people who believe in ownership and people who are looking to grow and and just create that wealth and that legacy, they're attracted to it. So the value that you're looking for, you got to invest where you look to reap from.
Oh, okay. So you were talking about the trust earlier today.
Correct.
And how it's only valuable for what you put in it. So with trademarks, right? So you have trademarked your business. So I trademarked my business. And I see somebody infringing on my trademark. People are quick to say, I'm going to get my attorney. But if you have a trademark, if you don't have an attorney to actually do something about it, then you just got a trademark if you don't have the funds to go after the person infringing on it, right?
Correct. And I'll give a quick breakdown. Our firm, we mainly handle business entity formation and intellectual property. So we do a lot with trademarks. Real quick, if you don't know what a trademark is the intellectual property that gives you ownership of your intellectual property, of your ideas and your branding. And see on the shirt, trademark is a big, intellectual property and trademarks are a big part of what we want to help people own. So if you have a trademark, it means you're the legit owner and the source of this product or service. Nobody else can use that name. And what people don't understand is it's not just the name, it's what the USPTO calls confusingly similar. So if you have a trademark, you need to enforce it. It's called policing your trademark. You can't just go let people using your brand because over time there's a legal term called dilution. Just in the same way like people say Kleenex when they mean a facial tissue. That's been diluted, it's been what we call generalized, and they fight very heavily. That's why when you see commercials, they'll say Kleenex facial tissues. They have to say that because they have to protect the sanctity of their trademark. So if someone is infringing on your intellectual property, you must defend it. You'd hit them with cease and desist. Ultimately, you have to take people to court. And so there's a whole field of trademark litigation, all that stuff that happens with that. But number one, if you have that idea, if you have that branding, you have to own it. Because if you don't own it, somebody else will swoop in and take it, and they'll make money off of it. Number two, I tell folks all the time, trademarking nowadays takes a long time. On average, you're looking between 12 and 18 months. So the time to trademark is yesterday. So even though it takes a long time, the day that you apply for your trademark is when you get your spot in line. So even if it might take a year and a half, if I apply today and somebody applies tomorrow, the trademark office will not even look at the other person's application until they're done with mine. So even though it takes a long time, get your foot in the door and start the process of owning what you have. But just to kind of answer the question directly, yeah, you got to police that thing. You got to enforce it. You got to hit it with cease and desist. So that's why when we talk about creating a holistic game plan of, I don't want to just throw some stuff out here. I want to have a plan to How do I protect my business? How to protect my personal? How to protect my intellectual property? All that good stuff, and have that power team in place to tell you, all right, this is what we're going to do, or even to a similar note, we had a client that they were getting a lot of copycats and knockoffs from some random company in China. I tell them, you can try to stop it, but realistically, it's not going to work out the way that you think it's going to work out. So how can we be creative with strategy as a business owner to have a very strong brand definition and people know what the real is from the fake? So these relationships are what's going to impact how people are advising you and how people are helping you.
Absolutely. And I'm sorry, I realized that we didn't get to tell you our fees, to share with you our fees. And so I apologize about that. But, well, and I want to make sure that you also get an answer to your question in that, again, I've said this repeatedly, but your financial advisor is going to look different at different stages in your life. And so I have a threshold because I'm a private banker. And so those thresholds, you know, may be an AGI of $500,000 a year. It may be home values of $1 million a year. But that doesn't mean that, so you've met me tonight, but that means, hey, if you need some help, I'm gonna just point you into the right direction of the person that'll help you for that time being. But then guess what? You are the owner of a booming business, and so, you know, in the short future, you're going to be talking to me again, right? But what you need at that time when you're starting off is going to look completely different than what you need when you're an established businesswoman that's been in the, you know, business for a decade plus. Your wealth needs are going to change, and so that's why I said your financial advisor may look different depending on where you are in your business. But I say that to say, you know, the fees that are associated with just a regular checking account and things of that nature are the only things you'll have to worry about. And again, I think most financial institutions across the board, when you talk about just, you know, opening up some standard checking accounts and things, they're minimal, or there's easy ways to work around getting those waived.
Absolutely, and just exactly what you said, there's going to be different services that you're probably going to need as you continue to grow. So for me personally, we do a discovery as well. So first 30 minutes is free. I like to connect with you, figure out what it is that I can do for you. I always tell my clients, let me see how I can potentially help you, because there might be a time where I say, you don't need my help. Or that's just not something that I do, and I might send you another way. Now, after that, I work with tiers. Now, it depends on what it is that you need. Are we just talking about tax preparation? Okay, I have different tiers. What are we doing with your tax preparation? Is it a personal? Is it a LLC? Are you an S Corp? Are you a corporation? Do you have employees? Are we doing 1099s? So it all depends on what your services are. Now, to go a bit further, are we doing bookkeeping? Are you needing a monthly bookkeeper? Are you needing payroll? Are you needing to be set up and have your employees or your independent contractors paid? So it all depends on what you specifically need, but during that 30-minute initial consultation, that's no charge, then we can talk about those details, and then I can give you an estimate. And then from there, it always happens with my clients. It's like, oh, okay, now I need this filing for this year. Franchise taxes next month. If you have an LLC and you don't know about franchise tax, you're probably forfeited at this point. So we need to talk about that. Do we need a reinstatement? So there's so many things that come under, there's so many layers to it. It's like, first have that conversation. Reach out.
And I just wanted to kind of piggyback off of that. And this is kind of my bread and butter thing that I talk about when it comes to the LLC side. I know this is primarily focused on the financial and tax side, but as a business attorney, I see it all the time. People will just kind of go online and go on a website or file themselves with the Secretary of State's office, and they think they got an LLC that'll protect them. That's wrong. That's just false. I tell people all the time, you don't just need a piece of paper from the state. Anybody can get that, but you don't want a paper LLC. You want a performing LLC. That's language that we use at our firm. A performing LLC is what's going to give you that peace of mind and that confidence that the business is set up the right way to actually protect my assets. Because the purpose of the LLC doesn't protect the business. The LLC protects you. So the LLC, when it's properly set up, creates what we call a wall of protection in between your personal assets and the business. So if something goes sideways with the business, it's only the business that's on the hook. Your personal assets can't be pursued. However, a lot of people don't set up and don't maintain their businesses the right way. So when something does happen, the legal term is called piercing the corporate veil. They can come after you personally, and they can hold you personally responsible. So when we talk about not just having that piece of paper, not having a paper LLC, and instead having a performing LLC, there's two main pillars, and this is all the legalese I'm gonna hit y'all with tonight. But this is near and dear to my heart, so people don't get messed over, because we do reinstatements, we do all sorts of stuff where people are needlessly losing protection and putting themselves and their families at risk because they're not doing things the right way. So when we talk about having a performing LLC, there are two main pillars. There's internal documents and there's corporate formalities. Internal legal documents, that's what we draft and that's what we create for our clients, and we customize it to their business. Those are things like your operating agreements, your consents, your resolutions. These are the things that show the rules and regulations and the powers and protections in your business. One of the things that's really dope about Texas is that Texas has laws in the books that are favorable for business owners. So there are protections that we can bake into the LLCs of our clients here that you cannot get in the majority of other states in the country. So when you're setting up a business with our firm, we create the LLC and we put that stuff into it on purpose, because it's almost like an insurance policy. You never hope it gets to there, but if you are in that situation, it's a powerful ace up your sleeve to have. So those are the internal legal documents. The other side are what we call corporate formalities. Corporate formalities are, I like to call it, the procedures, practices, and protocols that you do in your business in a day in, week in, year in basis. It shows that you're actually running your company like a legit company. And so when we talk about getting hit with the audit on the IRS side, if something happens to your business from a lawsuit or legal action from the state, they want to know that you're legit. What are your formalities? Do you have your annual business meeting? Do you have your minutes? Do you have your proper bank accounts? Are you commingling funds? Huge red flag. Are you mixing business money with personal money? Huge red flags. What's your state compliance look like? What's your franchise tax look like? All these things come together to show, hey, we actually have a legit business and I can prove it. So we talked about earlier, you don't want that paper LLC. What you want to do is leave a paper trail. You want those documents, records, and evidence that show that you're running your company the right way. Because God forbid anybody ever gets sued, but it happens all the time. It literally happens every day. There's a big difference between having to walk up in court with just that little piece of paper from the state that says such and such LLC that you haven't looked at in forever, versus you having your corporate binder from the past 5 years filled with all of your documentation. Nobody likes getting sued, but there's a big difference in the peace of mind that you have when your business is set up to protect your personal assets. So when it comes to doing all these things, and the beauty of it is all these things work together. Part of the internal documents and the formalities that we have for our clients sets them up for at least a minimum a set up annual meeting, which guess what? It's a write-off. I tell my clients, go to a nice little dinner, depending on the growth of your business, go to a nice dinner, steakhouse, talk about your business, talk about the year, plan for next year, review last year, what $250 bill, write it off, talk about what you did, boom, free dinner written off for your business. And that's part of your corporate protection and showing, legitimizing, and leaving that paper trail that you're doing the business right. So all of these things work together. That's why having people, we work with quite a few CPAs and teams of different wealth advisors and accountants, all the stuff, people who talk to each other and know your business and can look out for you. But this is why it all works together, and having that power team is so important and it's so strategic. Soapbox done.
Jonathan, then I got you.
So where can we get this booking link for Discovery?
Yeah, so you can find me at Uba Law Group on pretty much all social media, UBA Law Group. And then also just another free resource that we created is the document called the Power Team Playbook. This is what it's based on. So if you go to our law firm, ubalawgroup.com, UBA, U as an umbrella, B as in boy, A as an alpha, lawgroup.com, it's going to be a pop-up that'll show up in like the first 5 seconds. It's a free resource, has pretty much a game plan for every level of growth, economic growth, game plan, tax strategy. Start to talk with your CPA, talk to your bookkeeper, have these sorts of accounts set up and these types of conversations going. And then, if you're looking for further services, you can check us out, Facebook, TikTok, IG, all that good stuff, YouTube. Oh, and I can talk about this stuff. As you can see, we drop videos Monday through Friday on YouTube and all the socials. So we just want to educate people and help you get protected.
So for the last, this is our third week, and we talked a lot about like co-mingling of funds.
Yeah.
Okay, so let's just say somebody that I know, hypothetically, right?
In theory.
They used to co
right.
Because they got their life together.
Indeed.
How far back, if you were audited, are they checking for these commingling of funds for monitoring?
Now, the thing about commingling funds is that the IRS just does not like it. So if you happen to run everything through your personal account, business expenses, all of that good stuff, and you just were not aware, and then you started a system, you just need to have your documentation. You need to have your paper trail. Just because you've been running everything to your personal account whenever you go to file your taxes doesn't mean that you can't write off those items. That
Your business, like what if you've been swiping your business?
You're the opposite. Yeah.
then you need to stop it.
How far back does that go?
What the IRS, if they, okay, absolutely. Now, regarding documentation, moving forward, the IRS generally says minimum of 3 years, maximum of 6 years. If the IRS wants to audit, they generally can go back 6 years. So not to say that you have to go back and kind of clean all of that up. It's saying start today. Before it gets to that, start and begin to run that system properly. Stop running your business debit card for food and clothes and all of that good stuff, or shopping. Exactly. So that's where. So what? How are you paying yourself? So that's the next question. If you're a sole proprietor, if you're a single member LLC, how are you paying yourself, and do you know how to pay yourself? That's called an owner's draw. You're basically withdrawing from your business account and you're putting that into your personal account, writing yourself a check, transferring, and that's an owner's draw. That is not a deduction. A lot of people think, oh, because I'm paying myself now, I can deduct that. That is not a deduction. That is a part of your taxable income. If you go a step further and now you're an S corporation, now you have to be on payroll. Now you have to pay payroll taxes. We have to determine a reasonable salary. Now you have to understand what it is being an employee of your business and being an investor of your business and how that works. So it's just, and that's why you have these conversations. Because I may charge you a certain amount to talk to me after that free 30 minutes, but after that call, I'm gonna give you a tax strategy. You're gonna understand how you can rent your home out to your business for meetings, and that's gonna be a $14,000 write-off, or we'll talk about how that works.
Super Bowl is in town.
With the super, did you see that story that
Oh, yeah.
he charged $30,000, or that's the Super Bowl, but just for the PGA or whatever was going on, $30,000 he rented his house, and you can write that off as a business expense. So these are things that we talk about. So when you leave that call, you got to pay me, but I'm going to leave you with so much more value. And like he says, obviously, and I don't know if you can see, but I like to talk, and sometimes I have to say, let me stop, because I'm just giving you everything, and I'm also running a business. You understand? So that's why it's important to understand, having these conversations, understand this is an investment. When I make that consultation payment or that service payment, this is an investment to my business. It's not, oh, now I'm paid, I'm having to pay this. This is an investment.
And if you're at the early stages, I don't want you, because I know I said, if you have your formation documents, we can establish a business account. That is true. But in the meantime, if you haven't, filed, and if you don't have that set up yet and you're still in the early phases, set up a separate personal account, nickname it your business account, nickname it something else, but that way there's no confusing or commingling.
Absolutely.
So.
Absolutely, yes. Set up those separate accounts. And
Very smart.
That's another thing. And I don't need a microphone, but
Stop commingling. What she's saying.
and that also goes with oh, I'm sorry. I apologize. But also consider setting up those separate bank accounts just for your personal expenses, your business expenses, your tax account. Now, what are we saving for? High yield savings account. Now, what goal is it that you have in the next 6 months? Okay, this is for my down payment for my house, or whatever it may be. It's important to have everything separated, and that makes life so much easier than running. I get a lot of people that say, I made a lot of money in my business, but I have a client, he makes $500,000 a year, but he spends $490,000. So how much did you really make? Or if you have $500,000 and you're spending $510,000, now you're in the negative. So you can make a lot of money, but what are you keeping? That's the biggest thing. I can make money all day, but what am I keeping? Because if I'm spending it at the same rate that I'm making it, I'm balling backwards. Yeah, ball in control. I need a shirt like that. And ball in control is what I say.
And just as a really quick caveat, again, as a point to what she just said, as you're investing within yourself, talk to me, because we can talk about actual investments. You know what I mean? So, and I mean like a brokerage account, like the market's kind of scary right now, so you may not be, interested in stocks, but there's a plethora of products. I can't tell you, we have some really attractive T-bills in brokerage money markets where your money is liquid in the brokerage money market. Your money's liquid, but you're getting a return on that. Even if it's 5%, the money's just sitting there. And so again, that adds up. It adds up. And so it's something that you really, really, really want to think about. And it seems like a daunting task, but so many people, again, don't know. Just ask those questions, and it just gets the wheels turning. And things will start connecting, and you'll start putting together. You're like, oh, it was so simple. I never thought I overcomplicated things, so.
And that is the last, maybe the last thing that I'll say is don't allow it to overwhelm you, because this is a lot of information. And for someone who might just be in a specific space and finance is not really your thing, it just really turns you off. And then next year you're in the same space. You're like, I didn't do it because that was just too much. That's why we say ask what you don't know, break it down. It doesn't mean that everything we're saying you have to do all in one shot. No, let's start with a plan. Let's start with an action plan. Step 1, let's do this. Did you complete that? Okay, cool, let's move on to step 2. So it's like, it's a lot, but don't take it on as this is just too much. I don't want to think about that. It's once I do this, how is next year gonna look like? But if I don't do this, I'm probably gonna be in the same position. Mm-hmm.
Well, guys, we ran out of time, but real quick, in 10, 15 seconds, please give your Instagram handle or email, the best way for me to contact you so they can follow up after this session.
Yeah, so absolutely. You can follow us on Uba Law Group, UBA Law Group, all one word. If you're looking to book a consultation, just ubalawgroup.com. You can book a free discovery call, or if you need legal advice, you want to get in strategy, $100 for that first 30-minute strategy consultation. Follow us on all the socials. We'd love to hear back from y'all. And thank you guys so much for investing in yourself. It's 9 o'clock. I got 2 kids at home. People got families, people got stuff, but you're investing in yourself because you're looking to get a return that other people won't be able to get because they don't have this knowledge. So shout out to y'all.
Absolutely. And knowledge, taking in knowledge doesn't do, you have the knowledge, but unless you apply it, it's not going to do anything. So applied knowledge is everything. But if you'd like to book a consultation with me, you can go to my website, www.nextgentax, that's NX, there's no E, NXTGENTAX.com. On social media, my first business is a beauty business, Naturally Brown Lash, so I'm Naturally Stelline. That will be changing. I was talking to him about doing more social media stuff, so I don't do too much on there. But feel free to follow me on IG. But definitely the website is where you can reach me.
I do not have a social media for my role, but you can connect with me via email. I have some business cards, so if you guys want a business card, exactly. I'm happy to share that with you. But also, my email is it's long. My first name dot last name, so it's Deshonna, DESHONNA, Deshonna dot McKinney, like the town, MCKINNEY, at frostbank.com. Feel free to shoot me over an email. I will, and I prefer actual phone conversations. So I will pick up that phone call and I'll be like, oh my gosh, yes, I'm here to help. What do you need? So yeah, feel free to connect with me. Again, I'm so passionate, just like the other individuals said, I'm so passionate about helping because this is what we need. We need individuals that are passionate about growing our wealth and our success within our community. But I say that to say, call me, I'll point you in the right direction, or if you're already there, I'm happy to help you.
Absolutely.
Thank y'all for coming. Y'all can follow me on Instagram at, no, I'm just playing. But thank y'all for coming and attending session 3. What y'all think about it? Yeah, I appreciate it.